Robotics stocks are one of the most innovative industries in the entire world. They're up there with space tech, they're right in the AI conversation, and they are one of the fastest growing industries in the world. And we have some top robotic stocks we're watching right now. One of the top companies that we're going to jump into today is called Symbotic. And there's three steps that we go through when we're analyzing a stock. If you want to learn those three steps in depth and learn how to do them on your own, you can watch the video here. And then if you want to tune on into our daily live trading sessions where we're there Monday through Friday, it's the second link in the description to join StockMate. Let's jump into it. So the first step is to identify the market. The market of robotics has seen year-over-year growth that is in the double digits to sometimes triple digits. And top companies like Nvidia, Microsoft, even Tesla, Google are moving into robotics as the next potential trillion-dollar industry that's going to tap into economic growth that we haven't seen in a while. That's the theory. Now, we might still be far away in certain aspects, but there's a lot of real world usage you're seeing right now. You see companies like Serve Robotics, where if you go through LA or you go to San Francisco, you could see robots delivering DoorDash and Uber in these little carts that go to the restaurant, pick up the food, take it to the house. You can see that with Tesla, with self-driving cars, or Waymo, which isn't publicly here, but you could invest in it by indirectly buying Google stock. And you got self-driving cars. You most likely have the delivery of delivery of food or things with Amazon with drones. And robotics are becoming a very key part of the next evolution of AI. So real world usage, check. New revenue and money coming in, check. Then we get into step number 2. Once you get those things, and they can't exist with both of those things. You need both of those things to validate the market, which is the real world usage and the actual revenue or financials that are backing it up. Those things check out. We have a valid market right in front of us. Then we got number 2 again. The step that we go through here is the analysis. That's going to include looking at the financials, the news, and the charts. So if we're looking at Symbotic, for example, we could start off with the financials. Let's jump in here. And we can also pull up, kind of get into the news a little bit, or just general product awareness. If you're familiar with the company, they're partnered with companies like Albertsons, Walmart, Target. I don't see the Walmart badge, but oh, there we are. Okay, there's the Walmart badge. They have the back end set up for warehouses. Traditional warehouses have a lot of humans that are going in the back and picking up boxes and putting them on trucks, but they're shaping the future of robotics, reinventing traditional warehouses with end-to-end system leveraging a fleet of fully autonomous robots and AI-powered software. So this company has AI-powered software for inventory as well as the complex supply chain management for operating costs, out of stocks, SKU proliferation, and misalignment of inventory with demand. And they have robots that go and organize and move around things in the warehouse. Pretty epic. Now, they've signed some big deals. So let's get into the financials. Financials, their market cap's at 30 billion, and they have signed some deals in over $500 million in multiple occasions, particularly with Walmart. And you can see their revenue per quarter on average has been right around 500 million. In their last quarter, 592 million they reported. They did have a positive net income back in September 2024, but for the most part, they're still having a slight negative net income there, but revenue's up 25% year over year. Annually, you can see this big rocket in revenue from 2020, just 92 million, to 2024, they're at 1.7, and then this year they're on track to do over 2.5 billion. So revenue's growing, you can see that very clearly, and they're probably going to continue that growth so long as robots continue to optimize the big supply chains, and you're seeing it all over the place. Now, they have some partnerships with companies that are not always easy to get partnerships with. You got Walmart and Target and Albertsons and what have you, which brings us to their balance sheet. The investors like it. The investors like what's coming. So from going to more startup feel back in 2020 when they had more liabilities than assets. They now have surpassed their liabilities with assets, and they're at 1.6 billion in assets with total liabilities at 1.2. So financials looking pretty good. They've heated up their revenues at 2.5 billion. Does it make sense to see a $31 billion market cap? I think the market they're taking on right now is easily a $100 billion market or more. We're talking major department stores. This could be worldwide, as they are also working with the Walmarts, not just in the US, but over in Latin America. And we're only going to see demand for things like this probably increase. And I would imagine that if they get a kind of foothold on the market and get in early, they have a huge advantage. So financials look good. News looks fairly good. What are their recent innovations include? They're solving some complex challenges. They've got supply chain innovation, and they're using robotic palletization algorithm for optimized outbound pallets. So, basically organizing all the pallets. They have these like forklift robots that go in and out. They're ranked #1 in robotics category according to Fast Company's prestigious list. You can see that they're solving problems here with R&D investment of 600 million, 600 patents filed, 275 awarded, and they have some mobile robotics center of innovation. They're building out the software and the code, and they also even use some LiDAR in their sensor setup, and it seems like they're doing it all on their own. Maybe they have some backing there from NVIDIA, and we could kind of jump into what that looks like, but I don't see any. It looks like they're mostly end-to-end. They are building it all on their own. And so let's actually pull up them on our AI analysis software. We're going to go ahead and use Grock, and you can choose whichever model you want. We'll use Grock in this case. And let's get an analysis here. How do top transactors look? You have some of the top institutions include BlackRock. You got SB Management. Let's see the insiders. How do the insiders look? And the analysis of currently what's going on inside the company. And currently they're holding, we'll get into the technicals, how that looks. Let's see. For the most part, they've had more sells on the insiders than buys. On the institutions, they've had slightly more sells than buys, but generally speaking, they've been pretty bullish. And so when you're looking at the projections over the next month into the next year, they're anticipating from most models, we could pull up an analysis from all the models, but in most cases, you're looking at a bullish sentiment. This is a future chart projection of where, according to all of the data that we gave Grock in this case, the projections are projecting over 28% year-over-year growth in the company. If you guys want to get access to this, you'd like to use some AI analysis for your future projections, first link in the description down below to get on the first access list. Now, take a look at that projection. When you're looking at, okay, news looks good, they got good deals, then you're looking at the projections. 30% a year is not small. Let's take a look here. What's leading to that? They say that there is surging volume. If you look at just some of the structures that are building out in the analysis here, that the next few months, they've had a little bit of a bearish outlook as of recently with a pullback, but that there is a support level here at $50 a share and the nearest resistance at 55. And so if we're looking at it here, it's at 53. They have a support around 55. You can see that support there as they're in an overall uptrend. So now we're getting to the charts. Since this last year, they've jumped from $16 up to $84 a share. You can see that they pulled back to this rising support level down to $50. And this is what the AI was just saying. Hey, there's a support here around $50 a share. So that's what we're going to watch here. Now, the perfect kind of scenario for Symbotic stock in continuation of their trend, seeing them build more value in the market, you're looking at maybe a prolonged, more conservative sell down even further. But if you're looking at continuation of trend, you're looking about 30 to 60 or 70% potential if it's going to continue. Back to previous highs here would be about a 55% increase on the stock. So pretty bullish. And, when it comes to Symbotic, we always love it when we get to see things in person. We see the robots going and delivering Uber, or using the robots, you guys know, or going to the Tesla diner in LA when we did that video, or going to CES last year and seeing all the robots that were basically the robots that were doing dishes, for example. And, in this case, Symbotic, it's a little harder to see it because they're in the back end warehouses of these big department stores like Walmart. But, it's still pretty, it's still going to be something we're going to try and get into. So if we can see in the background and see that in the future, we'll try our best. But again, I'm going to be looking, I do have some long-term positions in the company, and we're going to be potentially looking to add, depending on how they react around this $50 support. If they could continue that trend up there, it's about a 25 to 50% potential for profit. Now, of course, with the earnings coming in good and they continue to do that, I'd like to see that. Sometimes that could be a reflection that they continue their overall trend. As of right now, everything I just went over, including the projections we went over with the AI, indicate the company's probably a little bit still undervalued for the long term, and that they're already making a lot of revenue. And we'll see them continue in the direction they're going as they're operating how most department stores will probably be operating 5 years from now. They're trying to do that today, and you can see it as a result. Their company's done really good. So again, if you'd like to join us in our daily live trading session tomorrow morning, we'll be there. We go into stocks like robotics, quantum, AI, space tech. It's the second link below. Would love to see you there tomorrow morning. It's early if you're in California, 6:30 a.m. But if you're on the East Coast, it's a little better, about 9:30. And for those of you guys that enjoyed, if I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next one. Take care.